we get to our guest, let's do a little housekeeping on the news that we talked about earlier.
1.5 is the cap for the HST.
For new home construction.
Yeah.
Okay. All right. That's good. 1.5, which is, again, adds up to about $200 or $300 a month.
Yeah, it's big money.
Yeah.
And I think we need so much new construction here in Nova Scotia. But the one thing that we have land.
Yeah, exactly.
That's one thing that they don't have in Toronto, I can tell you that.
Yeah, that's right. Another thing they don't have in Toronto is our guest.
That is correct.
Trevor Gordon, Business Development Manager, Home Equity Bank, home of the CHIP Reverse Mortgage. Trevor, welcome to the show, my friend.
Thank you. Thanks for having me.
All right. So when it comes to home equity, or rather the reverse mortgage, this is something that's been around for quite a while. Like, give us a little history lesson, if you will, on this.
Yeah. So Home Equity Bank used to be CHIP Reverse Mortgage.
Right.
And back in 2011, Home Equity Bank got their Schedule I bank license. So the name switched from CHIP Reverse Mortgage, and CHIP stands for the Canadian Home
Income plan.
Income plan. Yeah,
I'll just finish your line.
Clinton bailed you out.
Yes. So we got our Schedule I bank back in 2011, and since then we've been operating as a Schedule I bank. But we're around for over 30 years of providing reverse mortgages to retirees across Canada.
You know what? It's such a hot topic right now, Trevor, and I'm so glad that we're having you on. We've touched on this before. I don't have a huge amount of experience. Previously, I've been service certified with the CHIP, so I know a few things about it. Mm-hmm. And we do have a lot of senior clients. We have something like 40,000 clients in my practice, so we see a lot of people every single day. But this is a niche where I think it's becoming more and more and more important. There's so many retirees that their biggest asset is their home, and they're also living paycheck to paycheck in terms of they're living on CPP, OAS, and they're struggling just to stay in their home.
Yeah, Clinton, you and I have been working together in this industry for over 20 years.
Yep.
This year I'll be celebrating my 8-year anniversary with Home Equity Bank.
Time flies when you're having fun, I think.
It does, and I have to tell you where I was 8 years ago to where I am today. And I got the role with Home Equity Bank. And I was saying to myself, this is fantastic. One product, it's going to be easy to, sell and easy to, I'll know all the aspects of it. I don't have to know, 10 different policies for 10 different types of mortgages. But I soon found out that this demographic, I knew nothing about it.
And it's very complex.
It woke me up about this demographic and realizing that across Canada, there's a problem.
Oh, 100%.
And, I'm more today, I like to educate on this demographic.
What's the problem?
Well, and I think it's the stereotype that we have that when you're retired, you have money.
Or when you're retired, you shouldn't have a mortgage.
Well, exactly. Yeah. And, the only people that I had to gauge retirement on was my own parents.
Right.
And, luckily, my father was a good saver and a good investor. And, my mom and dad snowbird. And, I'd bring my son down to Florida, it would be a great time. And I always just thought, I had the opinion of, well, you're retired, so doesn't everybody snowbird? And I remember asking my dad one time, we were sitting on the balcony in the condo, and it was like, Dad, why doesn't so-and-so come down? And he said, I don't know. But I now know why. He didn't.
It's financial.
He did not have the financial money to do it. And, if, you ask me, okay, describe in one sentence, what does a reverse mortgage do? So a reverse mortgage gives retirees the ability to age in place while increasing their cash flow.
Right.
And that's, again, there's other situations that we have, but that really sums up about what it is that we do and why it's so important that this product is known out in the market that there is an option. Because, if we look at our average client is a 76-year-old widowed female.
Okay. That's the average.
That is the average.
Okay.
And you mentioned, Clinton, that the only source of income is OAS and CPP. So that client is making roughly $1,800 a month.
Wow.
That is it.
That's wild. And, for me, I almost feel where Chip is, and I'll still refer to it as Chip. I may not be using the right acronym, but I feel like where you are right now is where I was 20 years ago. When I started being a mortgage broker, people didn't know what a mortgage broker was. I was doing a lot of education, or like, why should someone deal with me? Like, that's what I was fighting against. And it just wasn't the education. Now, I think by and large, obviously a little bit with our show, we've educated a lot of consumers that they know that, an educated consumer, a consumer that's looking for the advice, that's looking for different products, is coming to a mortgage broker that really wants someone to hold their hand. But I feel like right now, reverse mortgages are in their infancy here in Canada. Even though this has been around for 30 years, it's just not widely known. Like I see the commercials sometimes with Kurt Browning on the air, but consumers by and large don't really understand kind of the mechanics of it.
Well, it's by far the most misunderstood product in the mortgage market today. There are so many false myths about what we do and how a reverse mortgage works. And I have some very cute, amusing stories behind it. And one recently, I was dealing with this gentleman. He was widowed. He was in his 80s. Very, very nice man. Had a mortgage, had some credit card debt. We were going to be able to take that pressure off of him and allow him to age in his home because he did not want to leave. But a few days before it was funding, he had called me and he said, Trevor, I need to tell you that my furniture that I have, it's not worth much. It's
Right.
old and it's not worth much. And I said,
Okay.
well, are you going to buy new furniture when this funds for you because you'll have some money? He goes, no, I'm happy with the furniture, but my son told me that when I pass, you guys come in and take everything. So I wanted to let you know that my furniture, there's not much value to it. And I chuckled.
And then you laughed and you're like, that's actually not the case.
Yeah.
I-
Misnomer number one.
Yeah, I can assure you, sir, we are not in the used furniture business.
And you're not also not in the taking a house business. Like you want
Absolutely.
someone else to deal with the house. You guys don't want to get into that situation.
No.
And then that's the myth that we take all the equity, away and that we take the property. Any banking institution, when they have to take a property, there's always a loss.
And they do not want it.
And we do
I think
not
even
want
before
it.
our show, I talked about buying a foreclosure. Nobody wants to get to that situation.
Yes.
And I think, correct me if I'm wrong, but the way it works is the borrower can stay in the home for as long as they're living,
Correct.
or as long as they're living or as long as they're in the house. So if they go to like an assisted living, then at that point they would have to sell the home.
Yeah. So, if we had a couple, husband and wife, and one of them was to go into a care facility, nothing changes.
Okay.
So
Perfect.
there's no requalification once,
As long as one person's still in the house, we're good.
absolutely.
And above ground.
Yes, yeah, exactly. And it's funny you mention above ground, Clinton, because I have had clients say to me that I'm leaving this house in a coffin. And, one lady in particular, a few
They
years
joke
ago.
going, instead of, head first, feet first, or whatever
Yeah.
that joke
I
is.
get you.
And she had MS.
Okay.
She was in a wheelchair, living by herself. And the reverse mortgage was to pay for care to come in to, help her with, food and cleaning up and her own, personal items. And, and even back then, I always wondered and said to myself, like, why wouldn't you just, it's time for the care facility. Why
Just sell the house.
Yeah, and I personally thought that myself, and I have to tell you, it never really hit me until last year. My mom and dad, they're in Parkland on Baker Drive. My mom's been ill for many years, Parkinson's disease, dementia, and my sister and myself were, we were telling my father, it's, she needs to go into a care facility because he was spending 100% of his time taking care of her.
Right.
And, it happened in September. She went into Oakwood, which is a great place. But I find even when I go there to visit her weekly or sometimes twice a week, it takes something out of me. those places, it's just depressing to be in there. So now I can
Because
really,
you wasn't able to age at home.
exactly.
Right.
Yeah, Trevor, do you mind if I just stop you for a minute, because I want you to be able to finish the story, but we need a break. Is that okay?
That's perfectly fine.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.